Good evening, all. Hope you're doing well and you had a nice weekend and a nice Sunday and you managed to put your feet up. And we've got quite a bit of a roller coaster week ahead of us. We've got the CPI and we've got FOMC on the same day on Wednesday, and then we've got ECB on Thursday. So it's going to be a big roller coaster for the Euro and the USD. And we have to remember that the big picture is that we are risk on. Okay, so don't be too bearish because there's still a ton of bears left in the equation. They're holding on, and we are seeing them explode, and they're having to leave the casino. It's a fairly sizable change, 1.8. Um, we'd come from minus 21 to 21 bears, but we're now 19 bears. So if we continue at this rate, we'll be sell. But we have to remember the big picture is that we're still a buy, but we're seeing a reduction on that bearish volume. Okay, so if we continue at this rate, it's going to take like 10 days, and then we'll fall quite heavily on risk appetite. But I think within the next 10 days, it's very likely that the herd are going to short very heavily. If you look at your social media over the weekend, it's just doom and gloom and World War III. All right, so it's very likely that the retail guys are going to short in the next 10 days. I don't think they'll be buying with all that stuff going on in the world. Just for them, it doesn't make sense, and it doesn't make sense. But we have to remember they get punished, and the herd have to get punished by the banks, right? So when they form a majority, someone has to take the other side of that humongous majority and those positions. So you're talking about 150 million retail traders. It's quite possible, and they've all got a position on the S&P. Someone has to take the other side of that trade, right? So that's a little bit of information there, and this is how you can use the risk calc. We are very much buy, but we're seeing a reduction, a weakening of the buy over time. Okay, so if that was green, we'd see a strengthening of the buy. Okay, so we've just reset the sheet, so that's fine. Obviously that makes sense. Tesla had a bad day on Friday. Indices rose. VIX got dumped. The Treasury yield rose, which is interesting because normally if that rises, we should see a stronger dollar. But that's been under a bit of pressure to avoid a wrecking ball, and there's not really much appetite for a strong dollar if the indices are pumping. And look at that, 1.2 there, 1.1, and nearly 1% on the Dow Jones. So we're seeing the change on DAX and US30. Everything else is kind of a bit wishy-washy. And so if we continue at this rate, we could be a sell for DAX and we could be a sell for the Dow Jones. And it all depends on the next couple of days. Like I say, it's going to take 10 days at that rate for it to be a sell at the big picture, but I'm pretty much sure they're going to short. I can't imagine them wanting to buy. It just, for me, thinking it in that mindset, you wouldn't buy, would you? I mean, you've got all that stuff going on, Israel, Iran, and you've got Russia and NATO. You've got this bird flu thing, and even if you're like very subject to fear and stuff like that. There's even the the eclipse. There's a lot of people who practice astrology. There are actually people who trade using astrology. So there are lots of things going on that could cause you a little bit of fear to creep in. But we have to remember that they heard all was very short already. So it's unlikely we're going to see a big crash because it would mean that these guys get paid. We need to see a reduction of these guys. They need to get squeezed, and then they need to get chucked off the boat, okay? Because they can't be holding on because they're causing the boat to sink, right? So they need to get ejected. And so that's that. So that's the bulletin. I think we'll probably look at something tomorrow. But with this FOMC and CPI on Wednesday, we're going to have to time it quite well. I'm just copying this data now because I want to get a reset on the scores. So that's that. So the scores are reset. It should be reset. Score change. Might as well do this now. And also before I call it a day, I need to import the API as well. So let's paste that again. I don't know why I didn't do it. Oh, because I've got to paste it in there. That's why. There you go. That's the reason for it. And so anything that populates here, it's going to give us a good sentimental or technical bias for a buy, but we want to ideally match it to the market structure summary, and that's the fundamental data that takes into account unemployment, inflation, GDP, the COT data, and also the sentiment as well. So it combines multiple things in this one column. This is just technical and sentiment. So I will be absolutely honest, I don't know why the pound CAD would have done that. I think it's because of the pivot data that we use. It's importing it or something like that. I'm not sure, but this is taken into account sentiment and technical. We haven't had an import of the API since Friday, so that has to be something to do with the pivot data. So that's something that I need to look at, but nothing too massive. But perhaps it could be an omen for a pound CAD long. But even though it's his range there, so and also you probably want a better score on the fundamentals. So what we want to be doing, I suppose, on a fundamental look would be to short AU, short EU, GU and NU, look for longs on UC and dollar Swiss. However, we come back to the risk calc, we're buy, at the sentimental big picture level. So it's going to be quite tricky. So the fundamental data saying dollar strength. Okay, so we might see it, and I can see the reason for it. There's lots of reasons for it, but it will depend on risk appetite, and it will depend on what the herd do over Asia and over London. So that's just that. So we can have a look at this tomorrow, I think, and we can look at some setups. And we have to kind of really respect the fundamental stuff because that's really, really powerful and important. So possibly an EJ setup, EN, possibly GA and pound Swiss, potentially. So anything that isn't range, we can look to sell. We could perhaps even delete that, and so it just says sell and buy, but range is fine. We can keep that. Basically, if it says range, you just sit in your hands. So that's that. Bubbles, there's nothing to show you because obviously the sheet's been reset. As you can see, there's nothing on the bubbles. Perhaps I could just quickly show. Yen is the weakest, Aussie is the strongest. Dollar and pound are going to have a big battle as well as we go into Asia. There's going to be a humongous battle on cable. So that will probably be quite tricky going into London tomorrow. GU is probably going to chop quite a bit because of the bubbles. So that's the sheet taken care of. But I think it's okay. We're just going to keep doing this. We've got the Twitter API, which is triggering the trades, and then we'll only open if it says strong buy or strong sell, and that's it. Obviously, the risk to reward obviously needs looking at, but really we should have more hits, more profit than losses, and that's why I've got 1R. So that is equidistant. That's 10 pips. That's 10 pips. Now, really, if we're using the sentiment and technical data, we should have more winners than losses. And this is why I've got 1 to 1. So we should. There's no reason why we'd have losses because we're using powerful sentiment and powerful technical data. So I'm not sure what to do. We could widen them, but I think it's a good test because we should be having more winners than losses because of the nature of the sentiment and the technicals. We're combining the two. It should be really powerful. So we're currently looking for a small long with a TP up here, and we can see we've got the 200 MA on the 5-minute chart. We were looking at the small time frame, looking at the order book on Friday, and that was actually quite good. And what we were looking at is the sellers coming in versus the buyers. So we've got 3.51 versus 3.67. So they have tried to buy on the last 5 minutes of the close. So that could be a little bit ominous. If they're buying en masse, we're probably going to have to see them getting punished, right? So you're just basically looking at that versus this, and it's like a tug of war. And remember, we've got a QDB code at fxssi.com, so use that and you can get a view of the order book. So just to recap, we're going to probably be quite choppy. Oh, I guess I can show you the indices actually. In fact, I'll show you Discord because I've already done the data. But there's gold. Okay, so we had the doji and they'd sold, so that's fine. That's the buy setup. We had the retest and for a bounce, US500, and now this is the trouble, is that we've got a congestion. So we had they gone long, really got punished, and then they shorted. So what had happened, what I was saying in Discord many moons ago, when the Middle East thing came about, we would have these punishment boxes, and they would be quite frequent. And now, due to the fear at that time, we saw price explode above the congestion. So it's possible it'll happen again, but we'll need to see conviction on their selling in order for this to push higher, right? So it's very important. 24 hours ahead of us. I just realized we've got a like a little glitch, not a glitch, but an error there. So that's a bit rubbish. I could probably have done that again, but that's fine. It's just it's me doing the circles and then not being aware that I had the circle there. So I could have undone that, but it's fine. We can overlook that little blemish there. So that's the S&P, and the US30 is very similar. So we've got a punishment box in the punishment box, but we'll see an explosion higher if they short heavily, or we'll see an explosion lower if they try and buy. But I don't think they're going to try and buy. They'd have to be crazy, and that's the trouble, is that they're going to get punished for using logic and being smart. And that's the really horrific thing about trading, is that if you do something that makes sense, you'll get punished. And it makes sense that you wouldn't really want to be buying into World War III scenario, would you? So be really careful, and I'll speak to you guys soon. And hopefully this video was useful. If you like it, give me a thumbs up and a subscribe, and I'll speak to you soon.